Good morning. This is Larry McMillan with a stock market update on Monday, March 17th. Happy St. Patrick's Day. So the market continued to sell off last week to the state where it got very oversold, and now we're seeing a couple of days of oversold rally. This oversold condition has produced some confirmed buy signals, though, so it is gaining some legs. Typically, an oversold rally will rally up to about the declining 20-day moving average, sometimes a little beyond that, and then fail. So we're still talking about 5,900, let's say, as a target for this rally. The support in the S&P last week, the last 3 days of last week, well, actually Tuesday, Wednesday, Thursday, saw a support in the 5,500 to 5,550 range. So that's a tentative support area. It's a little bit higher than the 5,400 we mentioned last week, was last September's lows. So the S&P is looking better. I wouldn't say good, but just better. We are below the three standard deviation Bollinger Bands. And if we move above there, it looks like we will do that today. We get what's called a classic buy signal. We don't trade those. We wait for further confirmation, but that could be forthcoming soon. And that would give us a McMillan volatility band buy signal. The equity-only put-call ratios, they're remaining bearish. People are still buying puts on the way up here for protection, I'm assuming. And that keeps these ratios rising and keeps them bearish on the stock market. Breadth has improved quite a bit, and the New York Stock Exchange breadth oscillator will go to a buy signal today. The stocks only has not caught up to that yet, but in the next couple of days, it probably will. The new highs versus new lows, that remains on a sell signal, although new highs are making some progress, but so far new lows are still outnumbering new highs. We came a long ways down, so it's not easy to make a new high for most stocks. The VIX came off on Friday and is lower again today, so the VIX spike peak buy signal that occurred last week is in place. And we've also got a couple of other short-term signals. VIX itself crossed below the 3-month VIX, so that's a short-term buy signal. And our two breadth oscillators, which had been quite far apart, moved back together. We call that an oscillator differential buy signal. So those last two are just good for about a week or so. The other one a little more than that. So all in all, things are improving, and if VIX were to close below its 200-day moving average at 17, that would be another feather in the bull's cap. And so for right now, we are continuing to monitor these situations. We're trading these confirmed signals as they come up on a daily basis and keeping fairly tight stops on them. And we continue to roll in the money options, deeply in the money options where they occur. So I invite you to visit our website. We put out some information on X or Twitter the other day that was pretty well received about the put-call ratios. They're getting up to areas where there have been buy signals in the past, but they're still rising. So that's they won't actually give a buy signal until they roll over. Meanwhile, have a great week trading and have a great holiday.